Hey everyone, welcome back to Altcoin Explorer, where I break down the market so you don't get blindsided. Today, I've got crucial updates. Bitcoin, Ethereum, Solana, XRP, and Chainlink are all sitting at major tipping points. Don't get fooled by those short-term bounces, the data underneath is sending some red flags. Let's dive in. Starting with Bitcoin, it hit oversold levels on the short-term charts, so we saw a little bounce, but don't celebrate just yet. We're testing a key resistance zone now, and if we break below, that correction could get ugly. Even Michael Saylor and MicroStrategy are still accumulating, scooping up 245 BTC despite the shaky market. Long-term conviction, but short-term? Not so pretty. The weekly chart is showing bearish divergences with RSI making lower highs as price pushes up, a classic warning sign. MACD's losing momentum. So, while the big trend is bullish, there's clear pressure in the short to mid-term. Here's what I'm watching. Support zones at $98K, $93K, and the golden pocket at $88K. If we lose those, buckle up for more downside. On the flip side, resistance at $103K and $107K. So if we bounce, don't get too excited. It could just be a dead cat bounce unless something fundamental changes. Ethereum broke down from $2.4 thousand and, as predicted, dumped to $2.1 thousand. That's now a support zone, but if it fails, $1.8 thousand is on deck. Momentum's weak, and bearish divergence is still playing out. Unless ETH reclaims $2.4 thousand sideways or lower is the name of the game. Solana lost $143, dropped to $125. If $124 fails, $105 is next. Trend's bearish, even if we get some short-term bounces. XRP broke support at $2.10, now hovering around $1.92. If $1.90 goes, look for $1.80. Short-term plays are there if you're quick, but the overall direction? Still down. Chainlink dipped under $12.80, down to $10.90. Lose that, and we're back to April lows. Unless we break back above $12.20, the path is lower. So, what's the game plan? Despite the little rebounds, the big picture is still bearish. Don't get caught chasing green candles, stay nimble, manage your risk, and know your entry and exit. If you're waiting on the sidelines, that's fine. There's always another trade. Stay sharp, stay prepared, and don't fall for the hype. Subscribe so you never miss these critical updates. This is Altcoin Explorer. See you in the next update, where knowledge is profit. Let's dig deeper. What's actually causing these bearish moves across the crypto market? First, macroeconomic factors are front and center. Inflation numbers just came in hotter than expected, and that's got investors nervous. When the Fed hints at higher rates for longer, risk assets like Bitcoin and Ethereum usually take a hit. Second, regulatory uncertainty is back in the headlines. Recent comments from the SEC and ongoing lawsuits are making it harder for big players to jump in confidently. That kind of hesitation shows up in the charts: lower volumes, weaker bounces, and quick sell-offs on bad news. Third, we're seeing a shift in on-chain activity. Whale wallets, those holding huge amounts of Bitcoin and Ethereum, are moving coins onto exchanges. Historically, that's a sign some big players might be preparing to sell, adding more pressure to prices. And finally, sentiment across crypto social media is turning fearful. Google Trends show searches for crypto crash spiking. When retail investors get scared, panic selling can accelerate the downturn. So, while the technicals are pointing down, these fundamental catalysts are adding fuel to the fire. Keep an eye on these drivers, they'll shape the next big move. Up next, we'll break down how you can protect your portfolio and spot signs of a reversal, so don't go anywhere.